Monday, and May 4th, Tuesday. I wrote in the note and tried to get it across in a couple of tweets today. But I'm not going to be on Twitter Monday and Tuesday of this week. So you've got this video, you'll have charts that go with it, and I'll do a market update Monday night with new charts for Tuesday. You just won't have me filling in all day long with my 30 or 40 tweets intraday on Monday. And I'm about 80% sure I won't be there Tuesday either. A slight chance that I will, but at any rate, just plan on it that way. If you like to catch all the tweets, they won't be there, but you have plenty of information here, I assure you. Let's take a look at the intraday chart. Here's where we started out the day on Friday with a gap down open after making a new all-time high, a new all-time closing high on Thursday. We had been making new all-time highs for about a week and not making those closing highs to go with it, but we finally nailed it on Thursday with an all-time closing high at 42.11. We got some inflation data in the pre-market that spooked us, and we were already kind of down overnight on some other data from other countries that had been spooking us overnight, and we wound up with this gap down open, and our open wound up being our high for the day. That's our overhead gap resistance to get back to the all-time closing high, 41.98.10. Our initial balance low was a test and hold above the weekly all-time closing high, so that seemed a little promising off the open, and we filled this in for quite a while, and then of course once we got into the European closing stretch, we wound up breaking below the initial balance low. As soon as we started breaking below this 41.85, I just knew it. I knew what we were screwed. We were just not going to be having any success for the rest of the day. And sure enough, we danced around with this level. But at the end of the day, we wound up breaking down to some new lows for the week. We had been holding that 41.76 level, broke that down to a nominal new low for the week at 41.74.85. Tried to come back one last time for that weekly all-time closing high. Couldn't make it. Closed at 41.81.17 to end the month of April, and missing for a second week in a row, making a weekly all-time closing high. So we haven't had one of those for 2 weeks. I wanted to show you this though. Here is a 5-minute shot of ES, just at the end of the day, this volume bar here. This is where the final candle is for the day. The 4 o'clock Eastern close was right here. And look what happened as soon as we closed. Boom, rallying up to a level that would have taken us well over 41.85 on the S&P. Would have taken us up to about 41.90 in fact. And even with this little sell of 15 minutes long here into the final close for ES at 5 p.m. Eastern, you can see that here was their close and here was ours. So there's still this huge difference in the two closes. So my point of saying this is that this was clearly about option bets to keep us below 41.85 for that close today. Okay, so here we are on the roadmap. Here is our range that we traded on Friday, a pretty big range. So don't be surprised or get frustrated if we wind up with an inside day on Monday. Friday was kind of an inside day as well. Even though we ended up trading a little bit of a lower low of the day, we really were trading inside the lower half of Thursday's range, the day of our all-time high. So if we come in on Monday and we have another sort of inside day, maybe a hangover of OPEX stuff from Friday, if we trade another inside day, it probably is just consolidation before we move up higher again. If we come in and we're kind of on the weak side on the lower half and maybe just barely hanging on and holding our higher low against what was happening on Friday, it could just be leftover option bets, and then they pull the rug and we end up selling off on Tuesday instead. So if we do have an inside day, try to be mindful of where it is. Is it in the upper half of Friday's range or the lower half of Friday's range? If we come in strong on Monday, we have our halfway back for the whole week that we just traded at 41.96.82, and then that Friday open and overhead gap resistance 41.98. So for the sake of sanity, let's just say 41.97 to 41.98. You see us trade through that. We are in that gap and we are going to fill that gap. And we're probably going to go on to close at a new all-time closing high on Monday. I don't know that we would get up to a new all-time high yet, but if we closed at a new all-time closing high, we will come in Tuesday and make a new all-time high. So don't be buying puts thinking that it's bearish that we don't make another new all-time high. because if we close again above 42.1147, we will go on to another high. If we come in weak on Monday and break below Friday's low, look at what's right there. We're going to be breaking that 10-day simple moving average. We break the 10-day. We got a couple of levels to look at through here. This Friday, April 23rd, halfway back, this was it. This was Friday, April 23rd. Huge range trade at this day. So if all we do is make a small look below the 10-day and turn at the 41.66 handle, that's what's holding us up. But if we probably break down through there, we're going to go to the 41.50s, fulfilling the 80 handle rule because we failed 4,200, 41.80, 41.60. We're going to wind up back at the starting zone at the 41.50s. The April week 4 halfway back is 41.56, and our 20-day is rising up in there. To me, this is plenty. This would be plenty of room. I don't think we would go any lower than that on Monday. And I'll do an update on Monday, and we'll see if we need to investigate lower or not. There's really not a lot to support us lower. There's lots of levels that might come in and hold us up, such as all this stuff that was going on in April week 4, where we've multiple times come down to around this 41.18, 41.20 to 41.18 level and have held it, and then raced back up to close above 41.34, which probably has something to do with this plus 10% marker on the year for a closing basis. Maybe we're going to come down here and investigate this area and hold it one more time, and then that's going to clear the way to move higher. So maybe if we break the 20-day, that's where we're going to wind up, is down here at that 41.18 area with a close above 41.34 on that day, just as we did twice here in April week 4. And then finally, let's take a look at the quote-unquote simplified daily chart that I've added a couple of elements to. This is a red fork. Even though it's a bull fork, see it's pointing up, it's sort of like a stagnant, sort of like low rising fork that's inside this big rising fork that we've traded in ever since the November election. And we always come up to the median line of this bull fork, including this last all-time high here in the middle of April, but our current all-time high has gotten nowhere near the median line. If we are going to break out and make it to the median line, it's at 42.57 and then 42.63 Monday and Tuesday of this week that we are about to trade. But if we come in and we only make nominal new highs, if we continue only making nominal new highs, maybe it's going to be because we're getting caught underneath this sort of sideways to slightly rising fork instead. So that's what's going to be going on if all we do is, maybe we go up to 42.20 and maybe 42.22, and it's only like 2-point higher highs, and then we wind up selling off for a couple of days. It's going to be because we're getting caught up in the net of this lower rising fork. But what goes with this lower rising fork is that we might get some frustration from those really not very satisfactory higher highs. People are going to get bared up, and maybe we're going to wind up taking a run down to the median line of this new fork. And the median line of this new fork, gets into line here with the 50-day simple moving average, and then all these gaps that we created at the beginning of the month of April. This bar here represents the trading zone from 40.33 to 39.72. So that's this close at 40.33. I'm sorry, this open at 43 all the way back to the March close at 39.72. Food for thought as we get down the line. Maybe if that 41.18 to 41.34 area fails to hold support, maybe this is going to wind up being the target then eventually all the way down here, exploring down to 40.33 to 39.72, the 50-day and the median line of this new fork. And even if all this broke, we could still even just test the bottom of our fork like we did back here in the beginning of March and fill all these March gaps, these April gaps in, and still hold and test the bottom of our main fork. So food for thought, this could be in the cards for us if things really start to fail and give way below the 20-day and below that 41.18 to 34 area that I showed you on the roadmap. Okay, that's it. Have a great rest of your weekend. Hope this video helped you out. By the way, I posted a bunch of very short videos on some individual stocks as well this weekend. There's one on Apple, Amazon, Google, and Tesla. I think that's all. So check those out if you're interested in seeing what's going on with those names. Have a great weekend. Good luck and good trading.